Over the past few years, Solana has been making waves not just as a high performance blockchain, but also for its unique place in the world of decentralized finance. Solana signs a spectacular performance in the fourth quarter of 2024 with a 213% increase in revenue generated by its application, amounting to somewhere $840 million compared to 268 million in the previous quarter. Hello and welcome back to the Analytics Insight podcast, where we dive deep into the latest innovations, trends, and disruptions in the world of technology, blockchain, and finance. And I'm your host, Priya Dayalani. And today we are exploring one of the most dynamic ecosystems in the crypto space, Solana, and of course, its growing role in the decentralized finance landscape. Now, the rapid surge of Solana is based on the explosion of meme coin trading as well as the rise of tokens related to artificial intelligence. However, it's also attracted attention and I would say also some controversy due to its association with meme coins. Now, today we are going to unpack these perceptions, look at the broader impact on the crypto space, and discuss the future of decentralized finance on Solana. So, let's welcome Chris Chung, co founder of Solana based swap platform Titan. Hi, Chris, how are you doing?
Doing very well. Thanks for having me here, Priya.
Thanks, Chris. It's a pleasure to have you with us. Of course, now, we are going to dive deeper into the role or, the core idea of Solana and how, it's playing an important role in decentralized finance. But before that, we would like to know more about Titan. So, can you help us understand what exactly Titan does or, help our listeners understand more about the platform of Titan?
Yeah, sure thing. So Titan is a DEX aggregator based on Solana. So you can imagine that the main purpose of a DEX aggregator is to route liquidity to give you the best possible price. So if you just swap, let's say Solana to USDC, there's a lot of liquidity pools out there. There's great DEXs like Radium, Orca, Phoenix, but you don't know which one will actually give you the best price. A DEX aggregator goes through all the liquidity for you, routes the optimal path for you, and then decides what path will give you the most token out, in this case USDC, for your token in, which in this case would also be Solana. So that is a DEX aggregator in general. Titan takes it also one step further. In addition to our own algorithm, that does seem to outcompete our competitors around 80% of the time. We're also a meta aggregator. So what meta aggregator does is that we aggregate other aggregators. So people like Jupiter, DFlow, SpiderSwap, and we'll route users to the best price at no fees automatically. So whether our quote is the best, Jupiter's quote is the best, SpiderSwap's quote is the best, we'll just route the user to the best price no matter what. So that's in a nutshell on what Titan is and what our goal is.
Great. I think that's a very insightful overview. Thank you for that. And I think we are always fascinating to learn how organizations like Titan are, carving out the niche in this rapidly evolving space of blockchain and crypto. Having said that, Chris, we would also like to know more about you. How has your journey been till date? What is your role at Titan, or what triggered your interest in Titan? And if you can highlight some of the role and contribution towards the company, it would be great.
Yeah, no, sounds good. I guess I started off my career, had a TradFi background, mainly in US equities, doing very low latency analytics. So you can imagine like doing thousands of valuation models, using millions of data points and doing all that in under a second. After, I guess, we started playing around with some data, we got into crypto because the low latency data, tick level pricing data in particular, was extremely expensive. So crypto came along around 2018, 2019, where we could get free access. So I was just experimenting with it, just fell in love with crypto and started getting into the crypto game with a fund. So I was also part of a crypto hedge fund, was building out all the infrastructure that did not exist back then. So stuff like back office systems, trading system, custodian management systems. And then, in early 2024, met up with my co-founder and we saw an opportunity in the market, especially in Solana, for another DEX aggregator to come in. And that's how we decided to start it up. I guess we have a strong team of engineers, strong team of mathematicians, and we really believe that we have a very, very nice products that really benefit users in the Solana ecosystem.
Great. I think that's a very enriching experience, Chris, that you have got. And of course, your role as a co-founder sounds pretty fascinating with a lot of impact on the company's growth and innovation. Moving ahead, I think Solana, if you talk about, I think it was once, criticized for its recurring outages. The blockchain has now established itself as a very essential player in the sector today, and is attracting a lot of traders, developers, and investors. So, I want to understand from you, since Solana has gained a lot of, traction in the crypto space, and it's often associated with meme coins. So how do you respond to that perception? I mean, what is your perception towards Solana?
Yeah, I think Solana is the main blockchain you want to be on if you want to conduct financial transactions. I think it's just a no-brainer. The low costs, the low latency just makes it usable for the end user. Because like 12 seconds, let's say on Ethereum, is too long for any other user. For any user trying to operate on a platform, 400 milliseconds is below the 1 second limit, where a user thinks that they're interacting with live data. Also, the low fees makes a lot of things reasonable. Like in Ethereum, it's harder to do DEX aggregation because of the high fees involved, especially if a transaction gets reverted. On Solana, with the low fees attached, it doesn't really add a lot of cost when you're doing DEX aggregation. So stuff like this, other features that would only be possible on Solana, especially with the high throughput, with the high TPS that Solana has, compared to other, I guess, low cost competitors, is extremely beneficial when we're talking about building the next set of financial rails for the global economy. These are just basically, in my view, prerequisites. And the meme coin craze that has been going on, I think, has been very, very helpful for the Solana ecosystem because it's basically battle testing the system. When the Trump and Melania tokens launched, in mid-January, any other chain would have crashed. Solana a year ago would have crashed, but with the meme coin craze that's been going on, the developers, the validator clients, everybody's been upgrading their infrastructure to handle this type of volume, and you saw it work very nicely during the Trump token launch. The Melania one, they had some issues with some of the apps, but I think that's all resolved now. And it's just a matter of just becoming more and more battle tested. Like if a chain can handle 50,000 new tokens every single day, that's pretty impressive given how many days that have passed so far since Pumped Off unlaunched.
That's a really interesting take, Chris. Thank you for sharing your perspective with us and our listeners. And it's fascinating to see how public's perception can diverge from the actual technological developments taking place. And you mentioned about some of the meme coins or some of the token coins during the President-elect Donald Trump election. So I think on January 8th, President-elect Donald Trump launched this Trump token, a meme coin on the Solana blockchain, and it is marking a significant step into the cryptocurrency space. Now, the launch attracted significant interest from retail investors and crypto enthusiasts, driven by Trump's global recognition and, of course, the cultural appeal of meme coins. However, this popularity also brought scrutiny regarding potential conflicts of interest and a regulatory framework surrounding such tokens. So I think we are already witnessing the rise of politically driven meme coins, and some of them are, of course, tied to Trump. And all of this has sparked a lot of discussions. So, what impact do you think this trend will have on the broader crypto industry?
Yeah, I think with President Trump's launching of his meme coin, I think it gives main legitimacy over to Solana as the main chain that you want to do actual trading on. Now, in terms of regulatory concerns or concerns about conflicts of interest, I would leave that to the, I guess, U.S. government to decide whether it is allowed or not. But the good thing about blockchains is that everything is permissionless. So, it's up to the end user whether they want to launch something, or platforms whether they censor stuff. But, generally everything will go towards one way, towards what the ecosystem is feeling in the end.
Well, definitely. And if we talk about politics and crypto, these are the two worlds colliding in very unexpected ways, and it will be interesting to watch how this evolves eventually. Now let's shift gears to decentralized finance. I think it is one of the most exciting and fast-growing areas in blockchain, and a significant player that is kind of disrupting the decentralized finance space is Jupiter. And for those listening who might not be familiar, Jupiter is known for its role in liquidity aggregation and decentralized financing and trading. So, at its core, Jupiter functions as one of the most advanced swap aggregation engines within the Solana ecosystem. So, it pools liquidity from various sources to ensure efficient token trades and minimizing slippage and offering users the best prices. So, like I mentioned, Chris, that Jupiter has become a very significant player in decentralized finance. So, what role do you think Jupiter plays in terms of enhancing the liquidity and trading efficiency on Solana, particularly?
Yeah, I think Jupiter was the first product that launched that really got mainstream attention, because they were the first DEX aggregator, and they do have a very, very solid product on that side. So what they really allow people to do is that they were allow people to be confident in trade that they were getting a better price than if they were just to be looking at one DEX. It also solved the issue, of people looking at 6 DEXs at the same time across multiple tabs. Jupiter would route you through what their algorithm believed was to be the optimal route. So our product at Titan is very, very similar to Jupiter in terms of trying to find the best end route for the user, and that has really enabled a lot of use cases to be built on top of Solana. That's really enabled all the trading volume that has gone through for retail traders as well as API traders. Not a lot of people know this, but people using the GUI interface only make up around 20% of trades. API users from Jupiter make up 80% of the volume that actually goes through. So Jupiter has played a significant role in developing the ecosystem, but I think right now a lot of people are trying to figure out are there ways to get better routes for the end user.
Well, yes, definitely. And, when we are talking about new ways of how we can increase efficiency, I think probably every year or in the changing times, we might find something new that might, replace like Jupyter that we have right now in the current scenario. So my point here, my next point is something that, we spoke about Jupyter. And while Jupyter has made significant progress, I think it is still not immune to the broader challenges of the decentralized finance space. The recent drop in the total value logged on the Solana network has raised concern about the platform's liquidity and its ability to sustain growth. But as decentralized finance grows, I think so does the concerns around security as well, because security in decentralized finance remains an overall, a major concern with hacks and exploits definitely often making headlines too often. So it's a major concern, I believe. So, what measures do you think we need to have, or there are measures already in place to protect the users and liquidity providers and platforms like Jupyter?
Yeah, so I guess in terms of security for DEX aggregators like Jupiter and Titan, the first line of defense is probably getting your security audit done. So whatever product lines are being launched, there should be security audits put in place by reputable audit teams to make sure that at least a second pair of eyes is looking at your code and making sure that there's no exploits that could be taking place. So I think there's a lot of very good firms like we use Sec3 personally. They've been amazing for us. But there's other very, very good audit firms out there as well. The other ones, I believe, are more related to how the app designs on how to send its transactions and how it sends transactions for its end users. So the main thing that we are protecting as a DEX aggregator is, let's say, if priority fees or your gas fee shoots up dramatically and the user doesn't actually want to pay it for that maybe a couple blocks or maybe a couple hours that the fees are extremely high. Setting a max cap on the fees is very, very, important to make sure that no user overpays on what they actually want to pay, but also have the flexibility that allow the user to pay to be included in the transaction if they wanted to. Other stuff does include, price discrepancies, because, sometimes issues do happen with their database, or there's a huge divergence between DeFi and CeFi. So just letting the user know that there's a huge price discrepancy in what is available on your DeFi algorithm versus what is available on a SEX is very, very important for users to know, so that they can decide whether to trade or not and to get a very disadvantaged price. The last one that's been, a lot more prevalent in Solana ecosystem lately has been MEV. So not all MEV is bad, but the type of malicious MEV we are talking about, such as sandwich attacks, are definitely still an issue on Solana. So what sandwich attacks basically are is that a person front runs their transaction and then also back runs their transaction in order to squeeze out a profit for themselves while giving the end user the worst possible price possible given their slippage settings. So there are a couple ways to protect against MEV. The most popular one is to use a Jito bundle, which we do recommend. But I think it's a lot from the app design at this point on how to protect the end user.
Right, definitely. And it's quite insightful, and it's also reassuring to know that there are certain robust measures taken to safeguard both users and liquidity providers. But from a broader perspective, Chris, I just want to understand, how do you see the DeFi community, this decentralized finance community, are working together to establish some security standards, like an industry wide security standards, and it's kind of ensuring a safer ecosystem for everyone involved. So, do you think the community is there, or it might take some more time probably? For the community to come together and develop certain standards that are industry wide acceptable?
Yeah, I think a lot of the standards have been set currently by the Solana Foundation and then also the developers. I think that's already happening. It's just not very publicly seen because all of this is mainly happening on the backend code. And there's been a lot of knowledge sharing among the Solana community as well. So everything from the foundation to the core developers, reaching down to like RPC providers like Helix and Triton, letting their, I guess, developers know how they can safeguard their users. There is a standard set of like rules that you should be implementing, but I guess it also comes down to the rules that the security auditors, the program auditors would be doing as well. That's been fairly standardized too. So I think, even though it's not like publicly out there, there is a core group that is still small enough that we don't that does make some sort of standard for users to and developers to benchmark themselves against.
Yeah, that definitely makes sense. And thank you for highlighting those aspects because I think I was very much not aware about it. Moving ahead, I want to address like the elephant in the room, that's the artificial intelligence. I think the combination of AI and crypto is nascent but rapidly evolving, and even modest applications should offer important power and network optimization opportunities. While accelerated adoption over the long term could lead to a crypto supported decentralized internet. Now, the intersection of AI and crypto offers potential for improvements across a range of industries, notably that face some very complex challenges or where there exists significant potential to unlock new efficiencies, including, I think, those that are currently unrecognized as well. So, how do you see AI and automation influencing market efficiency within decentralized finance and crypto trading?
Yeah, I think what you'll start seeing with AI and automation is that you'll have more and more AI models out there that could help manage money, like a fund manager. Right now, there's a lot of restrictions for people around the world to put their assets with a fund manager that is interested in crypto in general. And then there's lots of, I guess, custodianship policies. But let's say if an AI is deployed and acts like a fund manager and you can deposit assets inside their smart contracts, then I think it might be very interesting model because that would basically replace mutual funds, hedge funds, depending on how advanced the model is, and then the AI can make the decisions on what to where and what to invest on. It just has to be very, very stringently developed. I'm not sure where the regulation will come in onto this because somebody has to power the AI model. I don't think AI fully on chain apart from inference is fully feasible, and it constantly has to update itself in order to participate effectively in the markets. So I think what we'll start seeing is more of these AI bots that will start managing assets that are deposited onto smart contracts and then start making calls, start publicizing information on what they found and the reasoning behind why they bought the token. So I guess private custom managed wealth won't just be like reserved for a certain small group of people. Everybody will have access. They just pick the AI model they like the best, and I think that's probably where they will go. And with more liquidity, more assets on chain, that just helps lower the spread whenever you're trading on DeFi, so that your capital markets are the most efficient it can get as more and more actors come in and can trade at the, I guess, speed of light, right?
Right, that's a fascinating perspective on how AI and automation are influencing the crypto space. But like you mentioned that automation would take on roles that are more manual and repetitive, but eventually I think in the future if we see automation taking on more decision making roles, what are some of the potential risks or challenges you probably foresee that that might crop up, and ensuring that these systems remain secure and resilient against market volatility and external threats?
Yeah, I think it's just going to develop with time because when in like let's say traditional equity markets, at least in the U.S., we've seen events where a lot of these bots would like just pile on onto each other and cause like huge amounts of liquidations, huge price drawdowns momentarily before shooting back up. So I think people just have to take the knowledge, take the experiences that have occurred in traditional finance on when bots were first deployed, and then and then actually understand what caused those issues in order to not replicate it on the crypto sphere. Of course, it may still happen, but then everybody just learns from it and builds more resilient, I guess, bots, AI models to account for that. So I think it's just a learning period. Right now in crypto, I really believe that we are still in like the wild, wild west, and then everything is, modernizing, everything is getting more mature, more advanced, and that's extremely fascinating because that only with that type of progress can we expect to handle large amounts of institutional transactions and volume flow throughout the entire blockchain.
Right. I agree with you. And I think AI's role in crypto is definitely evolving. Now let's probably shift our focus to something that's been like a very hot topic in the crypto community, of course, regulation. As we know, the regulatory landscape for blockchain projects is constantly evolving. And as blockchain technology matures, the regulatory landscape for projects like Solana is likely to evolve towards a more defined and a standardized approach with increased focus on consumer protection, transparency, compliance, potentially including stricter rules around asset classification or anti-money laundering measures, and I think clear guidelines for issuing and trading these digital assets. So, how do you see the regulatory landscape evolving for blockchain projects like Solana?
Yeah, I think with President Trump having his new term in office now, I think that's very, very good for the regulatory projections going forward. He has launched his own token on the Solana blockchain. He's had multiple interests in the crypto community, and you can see from his appointments to his, I guess, his cabinet that it is very, very crypto friendly as well. So this is extremely exciting because I think that gives crypto projects, especially in the US, but also internationally, because everything interacts with US dollars in the end on crypto. It gives reassurance that you can launch a project and the US government won't be after you. So I think most recently we saw a Solana ETF application being acknowledged by the SEC, which means that there has to be a response by them by October. This is very, very promising because it could start signaling the influx of institutional flows into the Solana ecosystem specifically. You also see a bunch of other coins being launched, a bunch of other ETFs from other coins such as XRP, such as Litecoin, gaining more and more traction. So I think we are pretty much on the edge of a renaissance in terms of regulatory, regulatory guidance on what will happen towards the crypto industry in the next couple of years. This Basically, I believe that what we need is increased clarity so that crypto firms, crypto projects can know what is allowed and what is not allowed. With that, then we just let innovation run, and then I don't know where it'll bring us because nobody can really predict what will happen 5 years from now. The technology grows so fast; everything can change within 3 months. You see new players come out of nowhere within a year. They're like a mainstay within the crypto ecosystem. So I'm just very, very excited that all this regulatory clarity is going to be happening very soon, and then we can just continue to innovate and just continue making the funnest projects, the best projects that we could possibly do.
Definitely, and I think when you're talking about regulation, it's more like a double-edged sword in this industry, isn't it? I think striking the right balance between oversight and innovation will definitely be the key. One last question for you, Chris. How do you think the future of Solana, in decentralized finance? I mean, what excites you more about the future of decentralized finance, and where does Solana fits into that vision?
Yeah, I think there's a couple things I'm very, very excited about. So to me, like a blockchain's main purpose is for financial transactions. And with Solana being really the only blockchain that's been so battle tested to handle the amount of volume at the low fees that it does charge at the very fast speeds that the blockchain goes at, I think it's a no-brainer that the majority of financial transactions will actually go through the Solana blockchain in the future. Now, the speed is actually what makes Solana usable for the end user. Like what we really want is lots of volume, lots of trading done internationally 24/7. Right now, it doesn't really make sense looking at traditional financial rails why markets have to be closed on the weekends or on holidays, and that it maybe may take a couple days for a bank wire to process. All these things are due to middlemen sitting there that are taking a large amount of fees for basically adding no value. Actually, they're pretty much slowing down the value that's being sent through. So blockchains at DeFi specifically will allow us to avoid these costly fees. Now, I think the next stage of where the DeFi innovation will happen, especially on Solana, will be with payments and on and off ramps to further accelerate it, because I think that's the main missing component. Right now, it's very, very hard for users to move money from their bank accounts that are sitting in potential US dollars or any other currency around the world, because they have to basically send it to an exchange and then move it onto the blockchain specifically in order to interact with DeFi. Now, there are a couple on ramps, off ramps, but they take massive margins, like 5 to 10% of whatever amount that you're trying to send through. So it's not really realistic for a normal user to do that right now. But I think with the increased regulatory clarity we were talking about previously, I think that it will really help develop this on and off ramp solution as well as payments, because the only reason why people will want to get on and off is to interact with normal sales transactions that can happen every single day, or especially remittances that are a big part of the global financial system. And then this also allows everybody around the world to have a full suite of products at your fingertip, everything from trading to lending to investments in private equity. Really, it's just democratizing the world's access to very sophisticated financial markets. Yeah, I think with all of this, it's just really the chance to build something new with the unique properties of DeFi. It just really democratizes everything that we see to everybody. So somebody, let's say from Argentina with very, very high inflation can start hedging everything in crypto with their US dollars, and it just provides a very, very solid benefit. Or somebody like remitting their salary home so that they can help their family out without having to go through a lot of fees from like Western Union or any other of these payment remittances companies.
Right. I think the rise of Solana reflects a profound change in the crypto landscape, and it's truly an exciting time to be in this space because the pace of innovation is astounding, and Solana's role in pushing the boundaries of what's possible in decentralized finance cannot be overstated. And of course, it's even investors and users are seeking faster and cheaper alternatives to Ethereum. However, this growth largely relies on speculation surrounding meme coins, assets with extreme volatility, are likely to lose their appeal as quickly as they gained it. But again, the development of tokens related to artificial intelligence definitely opens up more sustainable prospects. And I think through enhanced adoption and innovation, the crypto ecosystem will definitely see more transforming ecosystem altogether. Thank you so much, Chris. It was a pleasure having you with us. And I think our listeners would have loved your insights on how probably we can, navigate the evolving world of Solana, decentralized finance, and of course, the entire broader crypto ecosystem.
Yeah, thanks for having me.
Thank you, Chris. So, this is for our listeners. That's all for today's episode of Analytics Insight. And if you enjoyed this conversation, don't forget to subscribe, leave us a review, and of course, share this episode with your network. You can view all our previous podcasts on Spotify and other leading platforms. Until next time, I'm Priya Dayalani, and I think this has been an amazing episode for Analytics Insight podcast where we decode the future one block at a time. Thank you so much.